Welcome once again to the Capital Spreads Weekly Market View. I'm joined once again by our esteemed colleague Bill Hubard. Thank you very much again for joining us, Bill. He's Chief Economist of Markets.com. We'll start with probably the most pressing issue of the week so far, which is the EU summit. And everybody's been focusing. I can see you're not seeing that much of an issue.
I don't think anybody was expecting anything, okay? And what we'd seen was really by the rumor, meaning we've been buying the euro, we've been buying Spanish bonds, etc., etc. So what we're seeing, what is the concern is that the people, if they really thought that we would get, quote, an announcement of a banking union by the end of the business tomorrow. So, I mean, I think that's, you got the French warning it, the Germans done it. So, I mean, I think anybody who's realistic was saying, if we get anything, maybe we're talking the end of next year.
What about Spain asking for a formal bailout? I think that was one of the things that people were focusing on as well.
Yeah, and I mean, that's what's moved the euro from what 128.64 above 131. That's what's seen the massive drop, in Spanish bond yields. But I think one of the things, and Angus and I were talking about it last week, I think one of the reasons why we haven't gotten is the simple fact is the Spanish government wants to make sure that, quote, Spain is in line. And I think we've got a problem with Catalonia. I think they have an election, their local elections at the end of November. So he wants to make sure that he's got his team in place before he goes after it. And I think there's also the concern, which I think is getting less so now, that when Greece took their bailout and went for another one and another one, everybody kept saying, well, the first regulations were easy. They will tighten them up and tighten them up. And I think that's what he was concerned about. If he asked for a bailout, and if you read the second or third pages, he said, wait a minute, the rules have changed on me. And I think that's what has really moved the euro and the Spanish bonds feeling, yes, it will happen. The question is when, I don't know.
We've had obviously a lot of risk-on trades going on at the moment. Everybody seems to be a lot more optimistic. I suppose you could say one of the reasons is obviously the US corporate earnings season is coming a lot better than many people analysts had expected. What's your reading of that?
Well, I mean, I followed everything in my career except stocks. I still think PE ratio is underground. Who knows what they are? But so I don't know. But I think the last time, I think we were talking like 40% of the S&P have either come in at or well above the earnings level. So I think that's been extremely important. And if you're a technician, yesterday we took out a very critical resistance level of 1440. So what we may start seeing is the simple fact is how much lower can bond yields go? I'm not sure. How much more movement is there in gold? I'm not sure. So you may start seeing with this wall of money that's in any currency, in every currency imaginable, you may start seeing that coming back into the equity markets slowly.
So do you actually think we could go higher from here?
Yes, I do. Again, maybe not today, not tomorrow. But remember, we've got 3 critical dates coming up. 6th of November, the US presidential election. Then we have the 8th of November, which is the ECB and the Bank of England. Yeah, I'm not going to get involved with the politics, but I do think that earlier this week, President Obama did show up for the, I guess we could say, was it a binding performance by, excuse me, I meant to say blinding. Was it a blinding performance by, and I think basically it was a situation where most people feel that if Mr. Romney gets upset with certain comments that one of his own people make, how would Mr. Romney do dealing with some of the other more strange people around the world here, if he loses his temper there. So I think what we see now is probably starting the divergence of Obama re-election. But as I said, Angus, before, and I made it to you, I think the key thing is what happens with our House of Representatives, okay? Because if Mr. Obama is re-elected, but the House of Representatives is the opposition party, then are we going to have the dilemma that most people are concerned about? What happens on the 31st of December with, quote, the fiscal cliff?
Sure, actually, yeah, that's a good point as well. Obviously, in terms of looking at just indices, the S&P is like almost within 10% of its all-time high. Now, what sort of thing would it take to actually push it towards that, rather than, given the rally we've had over the last few weeks or months or so, to actually maybe make people stop and consider which way they want to go?
Well, I think probably Michael Fish not giving us a meteorological lecture, but I think what we have is that I think we're getting very close to safe haven buying in the bond market. How much lower will bond yields go? I don't think so. So the wall of money, whether it be in dollars and euros or yen, that's been on the side for God knows who knows how long, we could start seeing that slowly coming back into the stock markets, because what we've seen is let me look at some of the bank stocks, and especially now with Spanish yields dropping, Italian yields dropping. 3-4 months ago, when Spanish and Italian yields were at 7%, we were seeing French banks, Italian banks, Spanish banks, even German banks getting clobbered because of having to mark to market, okay? Yeah. So if their bond yields are going down, the price is going up, and so maybe some of that money starts coming into the equity markets. I'm not sure whether we have enough time left in 2012, because a lot of people may start closing their books, but as I say, we may have that 48-hour window of opportunity between late in the afternoon of the 6th of November and late in the afternoon of the 8th of November, when we have presidential election results and what the Bank of England and ECB are going to do.
Sure. Speaking of the Bank of England, obviously we had the minutes yesterday. Yeah. They kind of split on whether they want to do further asset purchases. What's your reading of that? I mean, should they do it, and does the UK need it?
Well, say if we had this discussion last week, I was probably in the 80% camp that felt we'd get 50 billion QE announced on the 8th. I'm probably now saying, it may go down to 50-50 that we only get 25 billion. But I do feel that the central banks, knowing that the man on the street, okay, whether it be here in the UK, whether it be in the Eurozone, whether in the US, is just not spending. Now, okay, you may be spending, but it's on a pint of milk, etc. It's not on a new Lamborghini, sure. And it's not on a $2 million house, okay? So that's what we're seeing. We're seeing money flowing slowly, very slowly. We're seeing here in the UK this funding scheme, not what they wanted to. So my feeling is I still think that the Bank of England will come with another at least 25 billion QE on the 8th. With the ECB, I still figure either in November or December meeting at the latest, I'm still looking for another 25 basis point rate cut.
Wow. Well, given the fact that we've had declining jobless rates both in the UK as well as the US recently, do you think it's justified?
Well, one thing I've agreed with Sir Mervyn over the last 6 months, that some of the statistics that we're getting probably are not totally realistic. But I think one of the things that makes it difficult is some of the formats, some of the programs that we set up in the 1950s and 1960s, things have changed dramatically, okay? And I think one of the things, you just look at the unemployment numbers, all right? Like 5 years ago, it was more like 83% of companies were reporting to the Office of National Statistics. Well, now it's moved down to only 60%, okay? So therefore, if you have a margin of error, what is the margin of error on 83% versus 60%? And also, I think one of the things, and I've seen this in the U.S. employment statistics, especially in the month of September, because, you have the summer. Because remember, in the U.S., our schools are closed from June through August, so you have a lot of summer interns and summer temps. But you're starting to see a tremendous amount of temporary workers, okay? And I think whether they be temporary workers, whether they be interns, or quite a number of quality people, okay, with great skills, deciding they're going to set up a cottage industry. 4 or 5 guys get together. And so, I mean, yes, the unemployment numbers are still high, but I don't think they're as dramatically high as we would have looked at in the 70s or the early 80s, okay? So I think that's what we have to look at. It's just like, I don't know, maybe 10 years ago. You had several large UK companies, okay, that decided that they were not going to provide their statistics to the British Retail Consortium because they didn't feel that it was giving the marketplace a true value of how much footfall was going on in some of the local stores. So I think, the problem you've got is fewer major industries reporting to the statisticians.
Okay, excellent. Well, thanks again very much for your views, Bill. Thanks very much for watching us, and feel free to join us again next week. Thanks a lot.